Hey, future millionaires! Welcome to the Investing Blueprint. Ever wonder why some investors sleep like babies during a stock market crash, while others are pulling their hair out? It's all about risk tolerance, the secret sauce to investing without losing your mind. Stick with me for the next 5 minutes, and I'll break down what risk tolerance is, why it's your investing superpower, and how to find yours. Hit that like button if you're ready to take control of your money. And let's dive in. Picture this. You're scrolling through YouTube Shorts, and someone's bragging about making a fortune in crypto. You're tempted to throw your life savings into Bitcoin, but then the market tanks. Panic sets in. Sound familiar? Here's the truth. Investing isn't just about picking stocks or crypto. It's about knowing how much risk you can actually handle. Get this wrong, and you're setting yourself up for stress, bad decisions, and even losses. So, what's risk tolerance? It's how comfortable you are with the ups and downs of your investments. Think of it like a roller coaster. Some people, high-risk investors, love the wild loops and scream for more. They're cool with putting money into volatile stuff like tech startups or meme coins. Others, low-risk investors, prefer a gentle merry-go-round. They stick to safe bets like bonds or blue-chip stocks. Most of us, we're somewhere in the middle. Knowing where you land is crucial because it shapes every investing decision you make. Here's why this is a game changer. If you invest in something too risky for your comfort zone, you'll panic sell when prices drop, locking in losses. I knew a guy, let's call him Dave, who dumped $10,000 into a hot stock tip. When it crashed, thirded, he sold everything in a frenzy, only to watch it rebound a month later. Ouch. On the flip side, if you're too cautious, you might miss out on growth. My Aunt Sarah parked all her money in a savings account. Inflation ate her returns alive. Risk tolerance helps you find the sweet spot, growth you can stomach without sleepless nights. So, how do you figure out your risk tolerance? It's like a quick vibe check for your wallet. First, ask, what's your financial situation? If you've got a steady job, an emergency fund, and no debt, you might handle more risk than someone living paycheck to paycheck. Second, what's your timeline? If you're 25 and investing for retirement, you can ride out market dips. If you're 50, you'll want safer bets. Third, gut check. How do you feel about losing money? Imagine your $1,000 investment drops to $600. Would you shrug or spiral? Be honest. Pro tip. Most investing apps like Vanguard or Robinhood have free risk tolerance quizzes. Take one. It's like a personality test, but for your money. Here's how to put this to work. Number 1. Start small. Dip your toes into investing with a low-cost ETF or mutual fund to test your risk comfort. Number 2. Diversify. Spread your money across stocks, bonds, and maybe a sprinkle of crypto to balance risk. Number 3. Reassess regularly. Life changes. New job, new baby, new goals mean your risk tolerance might shift. And here's a bonus hack. Talk to a financial advisor. Many offer free first sessions, and they'll help you nail this. All right, you're now armed with the power of risk tolerance. Knowing your risk level is like having a GPS for your investing journey. It keeps you on track, no matter how wild the market gets. If you love this, smash that subscribe button and ring the bell. We're dropping money tips every week to help you build wealth. Also, drop a comment. What's your risk tolerance? Roller coaster rider or merry-go-round fan? And if you want a step-by-step guide to start investing, check out the link in the description for our free beginner's investing checklist. Let's make your money work harder than you do. See you in the next video.